The Central Bank of Nigeria dropped the interest rate it charges commercial banks from 13 to 11% last November. Central Bank Governor Godwin Emefiele says they decided to continue keeping the interest rate at 11% because of the falling price of oil on the global market.
The committee noted that at its November 2015 meeting, it eased monetary policy with a view to increasing the liquidity of the banking system. This was aimed at moderating domestic interest rates so as to encourage indigenous businesses to borrow.
Emefiele says Nigeria's foreign reserves, which are largely dependent on oil revenue, have taken a hit in the past few months.
The foreign reserves is about 28 billion, just for your information today.
A year ago, Nigeria's foreign currency reserves were $31.35 billion. The country derives 70% of its revenue and 90% of its foreign exchange from crude oil. Despite the challenges of falling oil prices, the Apex Bank boss says he expects growth in the Nigerian economy as the country is forced to diversify its economy.
As much as possible, we'll look at scenarios under different crude prices, and we'll continue to discuss at Management and Monetary Policy Committee. We'll try as much as possible to continue to share our thoughts with the fiscal authorities with a view to harmonizing our positions to ensure that, notwithstanding the drop in crude prices, that we are able to continue to run government and continue to do business.
He predicts that lower oil prices will remain for a long period of time.
It is imperative to brace up for a longer period of low government revenues from oil sources, which will necessitate hard and uncomfortable choices as the economy transits to a more sustainable source of revenue consistent with economic realities and strategic objectives of the country. In a circumstance, certain trade-offs must be envisaged and duly accommodated.
Emefiele says the CBN is committed to achieving a stable exchange rate for the Naira. Sama Mudidan, GoTel News.